anyone else. Use the ones that you need to use to get the right information so you can make informed decisions. You're not guessing anymore. That makes sense?
Yeah. So here's what we have so far. We have trend direction, and time frame. We have levels of support and resistance, and we have momentum as indicated by candlesticks kind of telling us that story. Wouldn't it be nice if we had a technical indicator that could kind of confirm all of those things going on at the same time, that would give us some corroborating information that maybe increases our confidence in that potential movement? So I'm going to suggest a technical indicator, but it is not the best technical indicator. It is simply one that is complementary to these things that we've talked about before. You might have heard about it. It's called the RSI, or the Relative Strength Index. And remember how we talked about trend direction relative to other directions? We talked about candlesticks being large or small relative to other candlesticks. Well, here we're going to look at momentum relative to what other candlesticks and trends have been doing, incorporated into one indicator. So Ray's got here on the list, RSI, Relative Strength Index. I've already got it in the chart. We're just going to open up the eyeball so that we can see it. And we're going to click on Apply and OK. But is it the best? No. Is it a technical indicator that can help us? Yeah, absolutely. So the RSI is a technical indicator that is bounded between 0 and 100. The indication of that indicator can't go any lower than 0, and it can't go any higher than 100, which means that when it's down near 0, it's extremely close to its lowest point. And when it's up near 100, it is extremely close to its highest point. So we're going to define ranges of those extremes. And by default, the ranges of those extremes are below 30, it's down extremely close to its low. And above 70, it's extremely close to its high. So if you see the RSI indication up in one of those ranges or down in that range, that's telling you that it is at an extreme. Some of you might be familiar with those two extreme levels expressed in different words. What are those words that sometimes are used to express those extremes? Overbought or oversold. I don't like those terms very much because those suggest that if it's in that overbought extreme, that it can't, nobody's going to buy it because it's been bought too much. Or that if it's down in that oversold range, that nobody's going to sell it anymore. It's got to come up because it's oversold. Those terms, overbought and oversold, are pejorative terms. They suggest that if it's in one of those areas, it's got to do something. It don't got to do nothing. It doesn't have to turn around when it's in those levels. It can stay overbought or oversold for a long period of time. The RSI works, this Relative Strength Index works by comparing size of candles. Where is price compared to the highs and lows over a period of time? And in this case, the default is 14 periods or 14 days, since we're talking about daily periods. So over the last 14 days, where is price now relative to the highs and lows of those candles? And if price is closing up near the highs, the RSI is going to print higher. If price is closer to the lows of those candles for that time frame, the RSI is going to print lower. So you see that RSI down, just stretch that lower panel up a little bit, Ray. Grab that and drag it up.
I was trying to get the...
You see it bigger. Yeah, right there. Where is RSI right now on Monster? Up in the upper portion of its range. It's up in that upper extreme, which some people would say, well, it's overbought. It's got to turn around and come back down. But it can stay overbought for a long period of time. But what do I notice about the trend of RSI, which is far more important than where it is individually, specifically on a snapshot basis? What's the trend of RSI? It's been moving up, hasn't it? along with what?
Price.
Price, which is ultimately what's most important, is what price is doing. So from this, we can take away from this discussion in this technical analysis perspective that I've got an intermediate or a long-term, intermediate term, and short-term uptrend on Monster. It's got momentum candles that are moving higher, and the trend of that momentum is moving in an upward direction. But Ray, go back to that time period between about 9:15 and about 9:22 where you had that high on the RSI and you had that next kind of move to the downside, kind of right in that area where RSI is trending down, but price is still trending higher. One of these things is not like the other. One of these things just doesn't make sense. When price is going higher, but momentum is falling off or tailing away, as indicated by the RSI, what might that be suggesting? Everybody's watching CNBC. Okay, fair enough. Price is still going higher. There's still buying going on, but it's coasting higher rather than being driven higher, rather than being pushed higher. Now, contrast that move that we highlighted right there between about 9:15 and about 9:22, where price is going higher but momentum is falling off. What then happened to the price of the stock when it got to near a level of resistance? It came back down, didn't it? What's going on with momentum right now along with price? Price is moving higher, isn't it? Yes? What's the trend of momentum at the moment? On the RSI? It's still moving higher, correct? Is price being driven higher or is it coasting higher? It's being driven higher. So I knew that when we put this together. I didn't show you that, but we kind of got to that point together here in understanding that I've got a momentum confirmation from that RSI based on what we were seeing in price action. The RSI is not an indicator that gives us a buy or a sell signal by itself. It is simply an indication of confirmation or lack thereof of what price is doing. Now, what did I say about the inherent bias of the market as a whole, and by extension, individual stocks? What do they almost always do? Go up, right? The market has an inherent bullish bias. So if I've got a stock that is in an uptrend, a long-term uptrend like this one is, and I know that the market generally goes higher because it's got an inherent bullish bias, and I see price moving up, but I see the RSI tailing away a little bit like it did there from 9:15 to 9:22, am I going to get extremely bearish and sell my entire position? Or just exit because it happens to have a downward move in the RSI? No. Now we call that something. We call that a bearish divergence in a technical indicator. Price is going up, but momentum is falling off a little bit. But because the market has a bullish bias, that's more of an indication of a pause in upward movement as opposed to reversal in upward movement. But we might look also for a situation where, let's go to McDonald's, where price is moving lower, but the RSI is starting to move higher. I think I've had a couple of, was it McDonald's that was looking at this? Okay, so I've generally got a downward trend. Okay, let's do this. Ray, draw me that resistance level, diagonal resistance level from the May high, okay, that May into June high, kind of right there, okay, and down to that high right there. So price is making a slightly lower high. But what's the RSI doing during that time frame? RSI is starting to move higher. And it's starting to give us a little bit of a bullish move to the upside. I think that was the one I was looking at for a bullish divergence. Oh, Starbucks, that's the one. Let's look.
This still is legit though. It's saying you're looking at the same thing.
Yep. This is maybe a clearer example. This is something that we can look for, and in fact, we can search for bullish divergences. Here it is. Okay, I knew I had drawn this in last night. What's going on with price? What's the intermediate term trend direction of Starbucks at the moment? Down. What's the short-term trend direction of Starbucks at the moment? Down. It's making lower highs and lower lows, isn't it? What's the RSI starting to do over here? It's still making higher lows. So what that is suggesting is something's going on. Something is changing with momentum. Buyers are starting to step in. Now, before we go to lunch here in just a moment, I want to illustrate and I want to talk about this. There's a difference between us in this room as retail traders and institutional investors, those that are trading on behalf of other people. We in this room, you, me, Ray, Scott, Rachel, Brett, everybody else, we are retail traders. We're trading generally on our own behalf. We might be managing a family trust or something like that, but we're still trading on our own behalf. Institutional traders, on the other hand, those are the investment banks, the money center banks, the insurance companies, the college endowment funds, the pension plans, the hedge funds, the mutual funds that are trading on behalf of other people. And they collectively swing a much bigger stick than we do, unfortunately. Well, not unfortunately necessarily, but they move a lot of money. And their biggest goal and biggest challenge is avoiding moving the market on themselves. So if they can start to get into a position by buying little bits of stock, smaller chunks of stock, without creating market impact, moving the market, that's what they try to do. So if I'm an institutional trader and I'm tasked with moving $100 million of client money into a position in Starbucks, because my research department said Starbucks is a buy, right? That's the example, not a recommendation. And so my boss comes to me and says, all right, here you go, $100 million, get us into Starbucks. Do I just queue an order and say 100 million, buy? What happens to the price of the stock? Boom, to the moon, right? You've seen the rocket launches from the Cape over here, right? That kind of thing. So institutional investors want to avoid that. So they break up those trades into smaller chunks. They bleed those positions in. Buy, buy, buy. Let it settle back a little bit. Buy, buy, buy. You know, I'm a boy band.
You're even dancing a little bit with that one. You kind of had a little.
There's money on the stage. I had to dance, baby. No. So they will bleed into those positions. They'll buy a little bit and then let it settle back. What do trends do? Remember what the definition of our trend was this morning? Higher highs and higher lows. Buy, buy, buy. Let the price settle back. Step in, buy, buy, buy. Let it settle back. Buy, buy, buy. Let it settle back. And that's exactly what's starting to happen here. They're starting to bleed into those positions. Now, do we know what they're doing or why they're doing it? We don't. And those news sources don't either. But there's an old joke that says, how do you know when there is an elephant in your refrigerator? You look for the footprints in the butter. You got it. You look for the footprints in the butter. You look for the footprints of those institutional investors. What are some of those footprints? Buying at support with momentum starting to increase. Was there buying going on at support levels over this position in Starbucks over this couple of weeks or so here in this time frame that we've highlighted? Yeah. When it comes down to a level of support, there's buying activity that goes on and momentum is increasing. it's very likely that institutions in this case are starting to build a position. You know all those news stories where they say Warren Buffett has purchased a position in whatever stock. And then what does everybody do? They go out and buy it too, right? Well, guess what? He's already in that position, and he's just waiting for you to follow along and push that price up so that he can sell some of it. If we can start to see this, not that we're going to trade in anticipation of, but what do we need to see happen here? Evidence that price is going higher. So let's crystallize all that we've talked about this morning now into this discussion. If I've got Starbucks that's now moving in a trend to the downside, but I start to see momentum shifting, and that price is at a level of support, what might be an if this then that statement that I could construct that would help me to take advantage of this circumstance? If price bounces up from support, then enter the trade. Or if price breaks resistance, maybe we've got a resistance there about 87.5 or so. If price breaks resistance and momentum is increasing, then enter the trade, else wait. Because what's that telling us? The bus is going north. We know how long it's going to go north? No. Do we know that it's going to continue to go north? No. Do we know that we're actually going to get to Charleston or Savannah? No. But we're sure as heck going to get off the bus before it goes all the way down to Key West. Now, if you live in Key West, it's beautiful. I love it down there. But we don't want to go to Key West. We want to go north. Get off the bus if it doesn't do what you expect it to do. But get on the bus when it is giving you evidence that it's going there. And that's the way we use technical indicators. There is not one best technical indicator. This is simply one that can help us to see that information. Right, Ray?
It is it.
So, speaking of information,
I have a lot of it to give out.
You've got a lot to give out. But do me a favor, before Ray gives us some information, let's give Ray and Scott big rounds of applause for helping us understand this.
Just give Ben Watson a big round. Great morning. All right, so nobody get up. So hang tight and listen to me real quick. Got several things to go over to help you out. First off, do you want your parking paid for?
Sure.
Yeah. Okay, so don't move. All right, that's gonna come last. All right, how much is it?
It's Orlando. It's
probably more than you want to pay.
It's expensive.
All right, so here's what we got. We also provide lunch for you. Yes? All right, so the lunches are out in the foyer out there. What we're gonna do is we're gonna have all 800 of you rush the back doors. All right? Actually, we're all gonna go out the back doors. All right? Take your time, don't rush. We got plenty of lunches for everybody to take. How many? One. Okay, take one, please. You're gonna go out the back doors, grab your lunch, come back in the front doors that we came in, okay? Come back in here and sit down and relax because we have our wealth management, wealth advisors, income, bank, all our representatives that are back there that y'all were talking to earlier. They're gonna come up here and give a small presentation about what they can